Sunday, the 1st of March 2020. Obviously, it's been a pretty amazing week on financial markets in gold and general S&P 500 and pretty much every market in the world. Really, the coronavirus has really sort of caught the imagination of all markets and act as a bit of a catalyst for this fall, which I think there's a lot of uncertainty right now. And from a gold price perspective, it was an amazing sort of few days. We had, if the last video I mentioned that that was only last weekend I did the video on the gold price, and I was looking at this target toward this sort of 1700 zone, and funnily enough, we got there almost on Monday. We had a big spike up, and a lot of the gold stocks rallying hard, and then we had a pullback and sort of this 3-day consolidation before this massive down day on Friday, and pushed it below 1600 again. And there's a few sort of factors happening here that are perhaps hard to understand. I mean, I think a lot of gold stock investors are not used to this environment where you see the market fall 4%, and the gold stocks and the gold price falls as much, and then the gold stocks fall 10%, for example, on Friday, sort of that 8 to 10% for a lot of names, and in many cases over that as well. So that's kind of a unique set of circumstances that doesn't happen very often. But in these true panic sort of situations that we saw in the last couple of days of the week, almost every asset becomes correlated. So it's sitting at around that 1600 zone, a little bit below. Did get down to 1560 on Friday night Australian time, but had a bit of a bounce up toward the close. I think one of the only other times that a lot of people mention this period in the 2008 busts, when gold should be acting as a safe haven asset, but was getting sold off hard, and I think the gold stocks in this period went down 50% in this highlighted zone I've got here, as the gold price went down maybe sort of 20 or 30%, from that sort of highs around 1,000 down to 700. And that was almost a liquidation event. Gold is an extremely liquid market, and there are a lot of people have margin calls, and gold. If they have gold in their portfolio, it's easy to sell right now, and that's kind of what's happened, I think, this week as well. And this is kind of what I've been reading, that it did seem like that sort of situation where people were liquidating their gold holdings to fund other margin calls, and that's really been the cause of this big fall in the gold price. But I'm trying to look to what's going to come next, and I think that's sort of the key aspect. If you think about the game plan here of the Fed, and is pretty well known. They can't stand any sort of. If I look at the chart of the S&P 500, for example, it's another pretty amazing chart. You talk about the old saying is up the stairs, down the elevator, and at the moment we're in a free falling elevator. We've gone down 12% in a week. Again, had a little bit of a bounce on Friday night, to hold above that sort of 2,900 there, and it's sort of come back to that range of the lows in 2019, mid 2019. The Fed came out with a statement on Friday afternoon in America, and said that they'll do what's necessary to support markets, and I think the implied interest rate movements are now pricing in at least a quarter point cut at the next Fed meeting in mid-March. But there is potential that if this gets worse, that you could see an emergency cut before then. And I think the markets are also pricing in the potential of a half a point cut at the Fed meeting in March. But at the moment, I don't think they're looking to do that emergency sort of action. But I think what's possible here is you could see some sort of coordinated central bank action globally, where they look to prop up markets and potentially do things such as stimulus measures. And with a global crisis such as this, or the perception of a global crisis, it means that you can have a global response. Whereas if you normally have something that's confined to one market, you can't really have a global response. But you could see some sort of coordinated action between the European Central Bank, the Federal Reserve, the Bank of Japan, all this. And I'm sure Reserve Bank of Australia, for example, I know Australia, they're pricing in interest rate cuts as soon as next week, and potentially the April meeting. So all of this sort of global crisis means that you can have a global response. So that's what I'm trying to think of when I on Friday when I was looking at buying some stocks. We're trying to think, is this move down? Is this a move down in a still in a fundamental uptrend, and what's going to cause that fundamental uptrend to continue? So I in general, I think that the potential for gold price moves higher is still very much alive, and I still think that's what's going to happen. So I was willing to buy into some of those names that were falling those big numbers, and I'll talk about that in a separate video on what I've been doing with my portfolio. Uh, so the Australian dollar is another one I talked about in the previous video. It had that big fall last week when it cracked through that 66.7 sort of range, and I talked about how I thought we could see 65 pretty quickly. I was looking for a bit of consolidation because it was sort of oversold toward the end of last week. We had that, but then it really got caught up in the hysteria in the last couple of days of the week, and it pushed down, got crushed on Friday evening down way below 65, and then had a bit of a bounce, probably as that when the markets were correcting slightly and people were willing to buy a bit of a few risk assets, and the Australian dollar generally will be is perceived as a risk asset. But I still think this chart, Australia's, people are starting to cotton on that these Australian companies are very exposed to this China, the coronavirus, and particularly it's in China. And I talked about that at length in the last couple of videos, and how I thought that the market was really not paying attention as much as it probably should to that. And we saw the ASX 200 fall also, that 10 to 12% this week, and wipe out sort of 8 months of, or 6 to 7 months anyway, of rising markets. So that's I think a few people got what had been coming potentially. One interesting thing I saw just in the last couple of days, these are stats on margin lending, and margin lending had not been something that had really, it peaked before the financial crisis in Australia, and since then it had been in free fall. You can see the amount of margin lending over probably $40 billion there, and then going down all the way until mid last year when we saw, driven by those interest rate cuts, there was a big pickup in margin lending in Australia, and that number, it's sort of gone up from less than 12 billion there to I think something like 17 or 18 billion in the space of 3 to 6 months. So there was a big reversal there, and I just wonder if some of that had was what was causing this free fall. And I think one thing I didn't show about the S&P 500, I think there's this trend of hyper volatility now, and that's potentially caused by things like passive investing. But this 10% fall was the fastest 10% fall in history in terms of trading days, and the next fastest was only 2018. So these falls and this volatility is getting steeper as as time goes on, and I think that's driven by that, as I said, passive investing and kind of the fact that the market is, controlled by algorithmic trading and such. So that's, I think, and again with this margin lending, I assume the same trend is happening in America as well, especially with such a strong uptrend in financial markets there for the last few years. It's kind of that complacency that I've talked about a number of times. And I was waiting for something like this to happen, and I think this is Thursday and Friday trading. You only see those days maybe once every 5 years. I can remember in 2011 there was events with the US debt ceiling. I think that was probably around these falls here, but it's pretty rare to see that sort of action. Some of the gold stocks, obviously, that was where some amazing price action on Friday in Australia, as I said, with all the stocks going down. It seemed as though they were still going down while the gold price was still holding firm above that sort of 1630 level. But as it turns out, they were kind of preempting this move in the gold price on Friday night Australian time, where it dipped that 4%. So the GDX is, looked like it was going to have that breakout as I was speaking about last week, and and then we've cracked back below, back to this sort of support zone around that 26 level. It did have a bounce on Friday night again when that gold price was rising as well. back up toward that 1580 sort of level. So it looks like it's held there. You can see this the tremendous volume in the GDX there, highest volume day in 3 years. So that was pretty interesting trading. I think that's probably the highest volume since the election of Donald Trump. So I'm still thinking that there's an opportunity here to buy some of these names. GDXJ I think was probably hit even harder on Friday night. The junior gold miners, you can see the chart there again, and back toward that sort of, it did break out earlier in the week above that sort of level, that 43 that I talked about last time, but then it's pulled back immediately to this zone here. And I'm seeing a lot of stuff about, this GDX and GDXJ are going to pull back even further. I just maybe in the short term, but I think I'm trying to focus on that sort of what's going to happen in the next few weeks. And I just feel like the chances of coordinated central bank action and potentially unconventional policies and very stuff that hadn't been really thought about too much. This offers an opportunity for it to be tested and for a coordinated response, the likes of which you don't see very often. I did see the GDX fund flows were interesting. I use this occasionally. It doesn't have the Friday number here. This is only up to Thursday, but you can see that big sort of pull downs in the GDX, and I think some of these passive flows, as I talked about, they exacerbate the moves in some of the names that are hurled in both the GDX and GDXJ. So your real mid-cap Australian names make up a hefty portion. The Van Eck, the GDX and GDXJ manager, they represent at least probably usually about 10 to 13% of the register of a mid-cap Australian gold miner, like Northern Star, Evolution, St Barbara, Regis, all of these 10 to 13%. And we saw huge fund flows, and I wouldn't be surprised if this move on Friday, if that number is down, sort of, it could be up to, wouldn't surprise me if it was 150 or 200 million in outflows in that fund, given the size of the move we saw. But I'm treating it as a buying opportunity in some names. So that's a little bit of a rundown of what's happening in markets this week, and I'm just thought it would be necessary to do. I don't do the gold price videos every week normally, but given the price action, I thought it was important to sort of look at the still the medium longer term trends here. And I'm not, whether we see a continuation of this move down, I just can't see it unless we continue to see this margin calls. But I think you're going to see the Fed step in quickly if the S&P 500 keeps falling at this sort of pace. You're going to see central banks act, because that's what they've done for the last 10 years, and I don't see that changing now. So if markets are falling another 10% in the next 2 weeks, I can't see the Fed waiting until March 18. They'll probably act earlier than that. So that's what I'm kind of expecting here, and I'll talk about some of the ways that I'm trying to play that, and some of the names that I've been buying into in the last couple of days in the other video. Thanks a lot.